Hey everyone! As you're likely already aware, the commercial real estate transaction market is going through a choppy cycle right now. The headwinds were largely spawned by the Federal Reserve's aggressive rate hikes and the potential for a recession ahead. Even though commercial real estate transaction activity in the first half of 2022 was strong, in fact, it was the most active first half on record, the second half of 2022 lost momentum quickly, and that's carrying into 2023. As I've mentioned, the slowdown was largely a result of the Federal Reserve's aggressive rate hikes last summer. Rates went up by 300 basis points in 140 days between June and November, and that slowed the market dramatically. While it's easy to simply say interest rates shaped the market, there are other forces in play. Although we've grown accustomed to exceptionally low interest rates, the climate we've been operating in for the last 10 years or so actually hasn't been normal. As I mentioned in previous videos, the 10-year Treasury's long-term average is in the mid 5% range. Over the 10-year span from 2012 until the middle of 2022, the 10-year ranged from about 0.5% to the mid 3% range. That allowed investors to leverage the low cost of debt into some fantastic investment opportunities. As rates went up fast, investors had a hard time getting deals to pencil using their old models. But I have to say, investors tend to be very innovative once they adapt to a new playing field. And once investors adapt, I believe the transaction flow will revive. If you look back at the number of commercial real estate properties that traded hands each year, there's a very important trend to consider. Back in the early 2000s, there were 6,500 commercial real estate transactions greater than $2.5 million each year. The transaction count steadily increased, reaching 30,000 in 2007. Then the massive liquidity crunch caused by the global financial crisis hit. In 2009, the transaction count fell to about 7,000 deals, basically the same number as the early 2000s. But lenders and capital eventually came back to the market, supporting investor activity. In 2015, there were about 34,000 commercial real estate transactions, and in 2018 and 19, the count reached 35,000 deals. Then the pandemic hit in 2020, and sales dropped by about 23% to 28,000 deals. That was a steep drop, but there were still more than 4 times as many deals in 2020 as there were in 2000 or in 2009. Then in 2021, there was a new surge of activity, pushing the deal count to a record high 47,000 transactions. And in 2022, largely because of the rate hikes, the transaction count retrenched about 20% to about 37,000 commercial real estate transactions over $2.5 million. But here's my point. Last year, there were 5 times as many commercial real estate transactions as there were 20 years ago. And that's the result of major changes in the industry. It's about more than just interest rates. Commercial real estate investors have become more sophisticated. The data and information available to commercial real estate investors has improved, and the liquidity of commercial real estate has increased significantly. But I think the biggest change is the nature of the capital coming into the space. The sector has broadened beyond REITs and institutions and ultra-wealthy private investors. Today, equity funds, syndicators, and even crowdsourced investment platforms have bolstered the flow of capital into commercial real estate. The combination of these forces have made commercial real estate more mainstream. The sector has matured. Despite higher interest rates, commercial real estate investment activity will likely continue to climb in the years ahead. But 2 things need to happen before the flow of capital is once again unlocked. First, the market needs increased stability and clarity on both interest rates and the economy. And second, the price discovery process has to play out and prices need to stabilize. Both of those things could happen in 2023, reviving the flow of capital into commercial real estate and boosting transaction activity. The many advantages of commercial real estate have become more accessible to a broader range of investors, and that will drive the expansion of the sector. Commercial real estate investment activity has steadily grown, and that's unlikely to be stopped by interest rates that rise and fall over time. Long-term momentum and the maturation of the sector will be an important consideration for investors who keep their eyes on the horizon.